From the following information, prepare a trading and profit and loss account. Cash receipts from debtor, it will go to cash book debit side, then it will go to debtor account credit side. All the payment will be entered on the credit side. Debit what comes in, credit what goes on is based on the real account. This is your closing debtor. The difference is 69,000 is the credit sale. Hello my dear student, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First College at Temple of Excellence, MYSURU. This session, I am going to hand Advanced Financial Accounting Second Semester Unit 1 Session 3 of BCom in favor of accounts from incomplete record. In the last session, I told you what do you mean by incomplete record. Incomplete record is nothing but single entry. Now, here, single entry is one-sided entry. It have got sometimes one transaction, sometimes two transactions, sometimes no transaction at all. It is unscientific method of doing the account. So we want to convert from single entry to double entry. What is double entry? For every corresponding debit, there is corresponding credit. What is double entry? For every corresponding debit, there is corresponding credit. In single entry, it's unscientific method of keeping the account, whereas double entry is a scientific method of keeping the account. Every rules and regulation they follow. They will have real account, they will have personal account, they have got nominal account. Where single entry is considered, they will have real account, sometimes maybe personal account. So we depend upon the double entry system. If you want to make the double entry system, you have to prepare a debtor account. We have to find out the credit sale or closing debtor. We have to prepare creditor account to find out the closing creditor and credit purchase account. We have to prepare the cash account to find out the closing cash. You have to prepare an account called statement of affairs, nothing but a balance sheet. For opening, it is called statement of affairs to find out the capital. So what are the things to be bear in mind? In order to convert from single entry to double entry, you have to prepare debtor account, creditor account, cash account to find out the closing cash, statement of affairs. Then we have to prepare a trading account, profit and loss account, and a balance sheet as per the first semester. Hope you understand which are the accounts to be kept in mind. One is debtor account, one is creditor account, one is BR account, one is bills payable account, one is the cash account. If anything missing in BR, you have to find out the BR account. Anything missing in bills payable, you have to prepare the BP account. That's called bills payable account, debtor account, creditor account, statement of affairs, cash account. Then we have to prepare trading account, profit and loss account, and a balance sheet. Little bit lengthy, but easy. If you know the format, becomes so much easy. We'll move on to problem now. Kern does not maintain proper books of accounts. From the following information, prepare a trading and profit and loss account for the year ended 31st December 2023 and a balance sheet as on the date. So here he has given 31st December 2022 is nothing but 1/1/2023, 31st December. When the opening balance is given, we mean to say that we have to prepare the opening statement of affairs to find out the capital. So what do you mean that? When the opening balance is given, you have to prepare a statement of affairs to find out the capital. What are the other things are? Cash receipts from debtor, it will go to cash book debit side, then it will go to debtor account credit side. Cash paid to creditor, in the creditor account we paid. In the cash book, it will come on the credit side. Salary is an expenditure. It will come in the cash book credit side, P&L account debit side, rent paid. It will come cash account credit side, then P&L account debit entry. Office expenditure is an expenditure. It will come credit side of the cash book, P&L account debit entry. Drawings account, it will come in your what's called cash account credit side, deduct from capital. Fresh capital introduced means additional capital. So additional capital will come, fresh capital we receive. In the cash book, it can come on the debit side. While you're doing the balance sheet, this should be added to capital. Cash sale. So it will come on the debit side of your cash book. While you are doing the trading account, it will come on the debit side of the trading account. Cash purchases, so sales is income. While you are doing the trading account, it will come on the credit side. It may be cash sale, and the credit sale will come the debtor account. Cash sale will become in the cash book. It will come on the credit side of trading account. Where it will come on the credit side of trading account. Cash purchase will come on the debit side of trading account. Discount receipt, P&L account, credit side. Then it will come in the what's called debtor account. Return inward means sales return. It will come in the debtor account. Return outward is a purchase return. It will come on the creditor account. Bad debt will come debtor account, credit side, then P&L account, debit entry. He had rupees 5,000 cash in hand at the beginning of the year. Charge interest on capital at 6%. So this will come in the cash book. Interest on capital, profit and loss account debit side. While you're doing in the balance sheet for a capital, opening capital plus addition capital plus interest on capital should be added. So we'll move on now. First, we prepare the statement of affairs. See that debtor will come on the debit side. This is your asset. Stock is a asset. Furniture is asset. Creditor is a liability. They have given the opening cash here. Beginning of the year. That will come on the asset side of the balance sheet. Cash, this is 5,000. Debtor, 18,000. Stock, 9,000. Furniture. If we add this, become this big. 5 plus 800, 33,800, 33,800. Out of 33,800, deduct the 6,000. 33,800 minus 6,000 is equal to 27,800 is the opening capital. Capital means opening capital. On which date? 1 month. So we find out the opening capital. One item is over. Then come back to your cash book is given. Two balance brought down. Start with 5,000 here. They have given in the adjustment this 5,000. Here is given. Start with 5,000. Debtor. Cash receipt from debtor is 60. Debit what comes in 60,800. There is an addition capital. They have introduced 2,000. Cash sale is 1,500. Debit what comes in real account principal. Debit what comes in, credit what goes out. All we have received. Totally we have got 69,300. Out of that, we paid the creditor. Cash has come down. We paid the salary. We paid the rent. We paid office expenses. He has drawn personal account. Drawing a day. There is a cash purchases. Furniture purchase 500. So whatever the difference comes, that is your closing cash. By balance brought difference is 1,100 is nothing but closing cash. Your closing cash is how much? 1,500. Then you have to prepare the debtor account. Two balance brought down. Opening debtor is 18,000. By cash receipts from debtor 60,800. By return inward means sales return is 1,000. By bad debt 200. By balance carried and closing down 25,000 is given. Totally it is 87,000. Out of 87,000 deduct 18,000. Difference is 69,000 will come. That is nothing but the credit sale. Generally, a debtor account will be prepared to find out the credit sale or closing debtor. If the closing debtor is given, difference is credit sale. If the credit sale is given, the difference is the closing debtor. We'll move on to next one. Total creditors account. To find out the credit purchases. By balance brought down 6,000 opening balance. To cash paid to creditor 44,000. To discount received is 300. Return outward is 800. Then to balance carried is 4,500. So totally 49,600. If we deduct the 6,000, here how will be? By balance brought down 6,000. To cash paid. To discount received. To return outwards. Balance carried on 4,500. Totally 49,600. The difference will come 43,600 is the credit purchases. Then we'll move on. trading and profit and loss account for the year ending. It starts with the opening stock of 9,800. Then when you make the purchases, cash purchase is 5,000. This is as per the your cash book. Credit purchase is 43,600. Totally it becomes 48,600. Out of return outward is 800. The net purchase is 47,800. Come back here. Sales, cash sale as per the cash book is 1,500. As per the debtor account, credit sale is 69,000. Totally it becomes 70,500. Out of return inwards is 1,000 become 69,500. Your closing stock is 13,200. Totally it is 82,700. Out of that 82,700, deduct 9,100, deduct 47,800. Out of 82,700, deduct 9,800, deduct 47,800. The difference will come 25,100, which is considered as gross profit. So your trading account is over. Then we'll go to P&L account. So we have to prepare profit and loss account. We brought down the gross profit. Gross profit brought down is 25,100. Whatever the discount received is 300. Salary paid is 12,000. Rent paid is 1,500. Office expenses paid 1,800. Bad debt is 200. Interest on capital on 27,800, 6% for 1 year, 2,006% for half year. So totally it will work out 1,728. This is 27,800 into 27,800 into 6 divided by 100. 1,668. 27,800 into 6 divided by 100. 27,800. See, 1,668. 27,800. 27 into 6 divided by 100 is equal to 1,668. 2,000 into 6 by 100 into 6 by 12. This is 60. Add 1,728. It will work out like this. So 27,800 for 1 year is 1,668. 2,000 for 6 months is 60 rupees. Totally 1,728. So this is for 1 year, this is for 6 months. The difference is net profit. So your gross profit brought down is 2,500. Your discount received is 300. Your salary paid is 12,000. Your rent paid is 1,500. Your office expense is 1,800. Your bad debt is 200. Interest on capital I have shown you 1,728. The net profit is 8,172. We'll move on to final stage, final account. That's the balance sheet. Your closing cash as per the cash book is 1,500. Your debtor, closing debtor as per the debtor account is 25,000. Closing stock is 13,200. Furniture purchase 1,500. Your closing creditor as per the creditor account. See that? Your creditor account says total creditor balance 4,500. You have to put it here. Closing credit. Start with the opening balance of 27,800. What you have find out? What is your opening capital? 27,800. Addition capital you introduce 2,000. Interest on capital you have calculated and show you 1,728. The net profit of the year is 8,172. Out of how much money drawn? 3,000. Balance is 36,700. 5 plus 7, 2, 1 plus 4, 11. So 41,200. So what are the accounts I have prepared? You know that. So as per the problem, I prepared first one, statement of affair to find out the capital find out the opening capital. Then I calculated your cash book. Start with opening balance. All the receipt will be entered on the debit side. All the payment will be entered on the credit side. Debit what comes in, credit what goes on is based on the real account. First, we have an opening balance of 5,000. We received from our debtor is 60,800. Then your additional capital is 2,000. Cash sale is 1,500. We pay the creditor. We pay the salary. We pay the rent. We pay the office expenses. Draw the money. We have made the cash purchases. Furniture purchase. Your closing balance is 1,500. This will come on the asset side of the balance sheet. Then we prepare the debtor account to find out the credit sale. We started with the opening balance of 18,000. Cash receipts from debtor 60,800. Return inward is sales return is 1,000. Bad date, there is no discount allowed. Balance carried on 25,000. This is your closing debtor. The difference is 69,000 is the credit sale. Then we prepare the creditor account. By balance brought down 6,000 is the opening creditor. We have cash paid. We have discount received. You have written outward sales. This is purchases written. Balance carried down is a closing creditor. The difference is credit sale. Then we prepare a trading and P&L account. Start with opening stock, purchases we made, and we come back here. It may be cash sale or the credit sale, return, closing stock 13,200. The difference is 25,100 is a gross profit. Then we brought down the gross profit, discount received, salary paid, rent paid, office expenses paid. Bad debt means irrecoverably. Interest on capital, I have calculated 1,728. Your net profit is 8,172. The last one, final balance sheet, closing cash, closing debtor, closing stock, closing furniture. Your closing creditor is 4,500. Start with opening balance plus additional capital plus interest on capital plus net profit minus drawing. It will come 36,700 plus 4,500, 41,200. Hope you understand. We prepare a debtor account, we prepare creditor account, we prepare the cash account, we prepare the statement of a and trading profit and loss account and a balance sheet. Hope you understand. We'll move some more problems in the next session. So we already solved this the third problem. We'll go another two problems of single entry. Hope you understand. So we'll meet in the next session with 2 or 3 problems. Till then, goodbye. Meet in the next session.